Okay, wonderful. Hello, everybody, and hello. Sorry, I had some problems, but I think that I sorted those out. So welcome everybody, and I have my friends Chris and Serge with me, and today I'm going to talk about something exciting, a new project, and then we will have a chat about markets. What each of us do, and all that nice kind of stuff. So maybe somebody of you already watched the Metastock webinar the other day, but what I want to introduce today is a new okay, so this way. So I decided a few months back that I wanted to do something more durable, more solid, I would say, in the trading space, because some of you might know, last year I had some health issues and stuff like that, so I understood the fragility of a person and that a person can have. So yeah, I decided to build something, a company that is still related to trading, and might be helpful for others. There are two layers actually, which I want to talk about today, and which is Mercury Intelligence. Me and Serge founded this project last year in April, basically. And it is a multi-phased thing. One thing is all of our we are close to close the beta soon, and we've worked on it so much, and it is going to be the Mercury Terminal. It is going to be engineered as a fully agentic AI, and it is well, it will be very nice, of course, but it is a terminal, but a modern terminal, a terminal powered by AI, an intelligent AI, an AI that knows what it's talking about, with advanced features, quantitative analysis, algorithms, and that will guide traders throughout their sessions, throughout the analysis, and their day-to-day lives. It is going to roll out slowly, but yeah, if you follow us, you will know all the updates. The second one is we've launched education. I launched 2 months live lessons program. 2 months live lessons, intensive live lessons with more than 70 hours of live lessons. So it's not going like be pre-recorded kind of thing, but it's going to be something where we can interact where I do my lessons, and interact. You will have a space for learn as a group, ask more questions, and I will explain the structure in my beautiful presentation. So from treasury markets to global multi-asset execution, a live institutional quality program on fixed income futures. We are going to cover foundation like sovereign debt, central banks, the yield curve. We are going to have a lot of practice, live and replay sessions on our products. And of course, as I said, it's going to be multi-assets, equities, forex, risk events, and economic data, all that kind of stuff. It's going to be 10 weeks in total, and not straight 2 months, and I'm going to tell you why. And of course, we will have guest lessons from expert traders, which which we have in this video today as well, but I will introduce them later. This program was built with a precise objective: to develop traders capable of operating with autonomy and consistency in fixed income futures market, regardless of their starting level. The fixed income markets are the largest and most important markets in the world, yet it remains the least understood by most retail traders. Understanding it deeply means changing how you read every other market. The program starts with treasury markets as the operational core, then progressively expands toward a global trading approach, learning to navigate across equities, FX, metals, and energies based on the current narrative and context. All sessions are live, with space for question and real-time interaction. Each lesson is grounded in the actual market context of the day, making it immediately actionable. A dedicated Discord server supports the community beyond session hours. What makes this different? Every participant builds a personal safe haven market, a calm, structured environment to develop repeatable edge on order flow and asset class relationship. By the end of the program, volatility and risk events are no longer feared. They become the most profitable sessions of the week. Every framework refined over years of work with professional traders and the community is included. Of course, talking about my own experience, which is I think that I can deem myself as lucky for the opportunity to have shared so much with many wonderful traders. And yes, theory plus practice in every session for a minimum of 3 hours per day. Theory is delivered via replay on recent market days to ground concept in the current context. Live sessions follow. The exact schedule with dates and times will be announced 10 days before the start, aligned to the most significant economic events for demonstrations. Week order may be adjusted to optimize live practice sessions. Okay, so what is why I've been talking about developing a safe haven for traders and many treasury traders or whoever comes into treasuries, so especially maybe last year, a year and a half ago, on our server, for example, they have stopped at the tick, at the 1 tick scalping, and so everybody now sees it as that slow market that you scalp for ticks, which isn't really true, because it is a market that can trend. It is, of course, a market that can range. But what makes it special is it's extremely predictable. It's extremely predictable in the sense that it's very structured. The order flow patterns can arise and are very noticeable on both the ladders on your charts, and depending on which charts, which I will show, of course. Everything in the course will be included, like both charting, heat maps, and of course the ladders as the foundation. So it is very predictable. They are slowly moving, but that means that they give you more time to think, take a more calm approach, and most importantly, they are the most important market in the world, of course, as I just said. They are the by far the largest, if we include altogether the overnight markets and the treasury markets. They are at the foundation of our economies, our financial system, all of that. So in the first week, we will basically look at things like what is effectively the treasury market, what's the market plumbing, and what's the liquidity, the real liquidity, in the world, the money that is available for the markets and for the economics to work. Then we will look into the treasury department more in depth, and we will look at what are the primary dealers and those big banks that work together with the treasuries and the central banks to accomplish different things. We will understand why debt is at the core of economies since forever. It's weird to be said, but yes, our economies are based on debt. All these nice kind of things. Of course, I will share the website. The website is already online. If all the details that you can see here are available on the website as well. So in week 2, we will look more deeply at central banks and the short-term interest rate futures. We are going step by step into building our framework. We will look at what's the real what the central banks do. It's not just the FOMC meeting. They work all the time, of course, and there is more data that come out. What is the summary of economic projections and how it influences all the next quarter after of which it comes? What are the short-term interest rate futures like the SOFRs and the Fed Fund futures or the Euribor markets in the Europe? The steer analysis, of course, we will start to put in practice some of the concepts, and we will have a lesson dedicated to them precisely, and why we are studying them and how they could help us in day trading. Because one might think, why I'm going to study steers if I'm not going to trade them? Well, because they are extremely important, and even for day trading, they will really tell you where it's time to go with the market or when it's time to pay attention and see if there can be a reversal, for example, or on economic day release alike. They will help you a lot to understand where the market is stopping, where it's going to be your next entry. On day 4, we're going to have our first guest lesson, Mr. Orderflow. Of course, I'm not Mr. Orderflow, I'm Jagger. Mr. Orderflow was a bit busy this year, but he will do a guest lesson for us on day 4, on the second week. Then we are going to have the week 3. I'm not going to go so much into detail, but you can see now we went to something less practical and might be say less nice for traders over here, but here we are going to go more and more hands-on. So we are introducing the yield, the shape, the spreads, because you have to know how to hit the yield curve, how they move relative to each other, and then we are going to start notes and bond futures. Here, operational strategies from the first tick to narrative trades. I wanted to say from first tick because that's where everything starts, like taking a first tick without ever going into a drawdown on treasury futures trading is something very common because you can time them very, very well. But starting from a first tick and closing it out, and then the market starts moving for another 5 or 10 ticks, it means that you are wasting so much time and so much effort. So that's something that we will develop from the start. We will understand how to hold those trades until meaningful returns. We are going to have, of course, sessions at various moments of the day. Day 3 of the third week, we will be on the ZN because you know that you have a lot of instruments on the treasury curve. You have from the 2 years to the 30 years, and in the case of the American markets, you have 6 instruments, 2 to 30. We will focus on the ZN as the operational compass. as something that is in the middle. It's called the belly. It's called the belly in normally. It's called the belly, and you could see it as like guiding all of the other curve when they're moving all together, and that kind of stuff that we will focus and start trading and understanding and the analysis on the ZN. It's a more difficult. I mean, the 2 and the 5 years alone as part of the outright. I don't trade them. I don't suggest to trade them because of the small tick size, and it's not worthy. So the ZN becomes the most difficult one where to catch an entry without waiting in the queue. But once ZN is understood, all of the rest of the curve becomes easier. Week 4 is going to be full of practice, with day 1 and day 2 full of ZN focus, and then from day 3 ZN plus ZB. This is going to be full out onto practice, but as I said, all of the previous weeks they will have a part of theory and a part of practice for a total of about 2 to 4 hours, depending on the topic, and with, of course, about 2 to 4 hours per lesson, depending, of course, on the topic. And on week 5, we are going to have a pause and consolidation phase. What does it mean? No structured lessons this week. This is dedicated time to digest the material from the first 4 weeks, revisit recorded sessions, and allow the new concepts and frameworks to fully integrate. The Discord servers, of course, remain fully active for questions, peer discussions, and autonomous growth practice sessions throughout the week, of course, with my assistants as well. I'm not going on vacation. How to use this week? Of course, a rewatch. Maybe somebody is a bit left behind, so they need to catch up and that kind of stuff. Then on week 6, we start again with a lot of practice. 4 live practice sessions. 4 live sessions still focused on 2-3 specific segments of the yield curve. The goal is to consolidate operational fluency on individual instruments before integrating the full picture. Each session builds on the discipline of reading a limited number of instruments with depth, avoiding the trap of spreading attention too thin before a repeatable edge is developed. Live market session with real-time commercial analysis. I've put only live market sessions, but probably in all of these practice parts, we might like replay recent days just to understand the patterns, how the volume distributes, and things like that, like to ground the also our chart setups, because yes, I'm a ladder trader, but I still use various kind of charts to help me, because they are easy to see, like for various reasons. No, it doesn't mean that if one is a ladder trader, he doesn't have to look at charts. No. Week 7 is going to be full curve, spreads, risk events, and economic data. Day 1, we are integrating the entire yield curve. We are going to look a bit at the spreads. I'm not a spread trader. I don't trade spreads, but spreads are important to understand. Risk events and data. This week, this day's structure might change, because if we are going to do a risk event lesson, it's going to fall into a high impact day, of course. We will fit this into the right place. Replay and narrative, concrete practice on replay sessions, narrative construction and examples. Of course, now it's a replay specifically because we have integrated the full curve. Day 4, live practice with full curve live sessions. Week 8 is things are getting really, really interesting now. We aren't going to introduce equities as risk on, risk off dual regime, using ZN to time your entries on equities, using treasuries overall, because pretty much all of the time the treasuries are the leader, and everything else can depend on them. Of course, depending on how strong is the narrative. For example, the past days, of course, unfortunately we have the war in Iran, with the Strait of Hormuz closed. So oil is pretty much driving, has been for the most part of the week. So we will understand what does it mean on risk on, risk off effectively, how to look at the VIX and the move. The move is the VIX, but for the treasuries plus volatility. There are many other volatility products that might be even better than the move. But anyways, and we will understand how to use the two asset classes together to ride those nice sell-offs on equities. On day 2, we are going to integrate Forex, because Forex is extremely important as the market that is most directly integrated with treasuries. There are some certain very, very nicely correlated FX pairs, or for example the yen in the Swissy. On risk-off days, you can ride them along with the yen and with the treasuries while you are short in the equities. And on day 3, we have Crisbur. Our friend Crisbur is going to join us on day 3 for a first guest lesson on equities. It is going to be a long lesson, similar to the ones that we will do daily, day by day, and yeah, he will tell us all of his secrets. On day 4, but we will introduce Crisbur after the presentation, of course. On day 4, we will going to have a live multi-asset session where we trade everything all together. Of course, we are bringing this forward, and now that by week 9 we have all of our markets that we are looking at. We have guest, the third guest of the program on the first day, and it's Serge. For equities and multi-asset trading, Serge has a focus on equities, commodities, and other markets as well. He trades similarly to me, however, with the difference that he puts more importance to equities. On day 2, live practice, with something special for each of them. As an extra, on week 10, AI applied to trading, because as somebody of you knows, I also use AI a lot with my personalized frameworks and kind of views. I will teach you how I use AI effectively to develop stuff, basically, so you can apply that to trading, building your own indicators, building your own dashboards or whatever. So we have a lot of frequently asked questions over here. You can what's that again? It is going to cost 1,200 euros, which I think that for 70 more hours and live lessons isn't that much. I mean, there are things that cost much more, but also I didn't want to undervalue my own job, of course. So now I'm going to. Are you there, guys?
Yeah, I'm here.
Where is Serge? So I introduce you, Crisbur and Serge, wonderful friends. Crisbur, do you want to introduce yourself more in detail? How you trade, what you're going to show us, and that kind of things?
Yeah, sure. First of all, thank you for the invitation. I'm very happy I'm here. And for the guys who doesn't know me, I'm Cristian. I'm from Romania. In the trading community, all the people know me as Crisbur. I'm a full-time futures trader, active in the markets for over a decade, specializing in equity indices and focus on the first hour of the NTH session. Yeah, of course, I have some long-term portfolio and that kind of stuff, but it's not the time right now to speak about that. So my main focus is RTH Open. I also have a level 4 diploma in trading and financial market analysis from the London Institute of Banking and Finance. That was a program delivered from a London prop trading firm. My primary market is SP500, but I also track Nasdaq, gold, and crude oil. My approach is built on option market theory, so I use a lot of market profile and some volume profile, but also my focus is on order flow analysis, supported by custom order flow triggers I develop inside Sierra chart to optimize execution around my key levels. I also use custom studies in Axil, but also I have a lot of triggers based directly on Sierra chart studies, and I use color bar based on alert condition. A lot of guys probably here they use Sierra, so that they know what I'm talking about. So overall, I'm a scalper and a day trader, and I never try to predict the market. I simply try to adapt to the market condition. Of course, from time to time, I also take swing trading, often, to be honest, in the option market rather than the futures. And this is overall how I view the markets. I can share my screen or something, or only the webcam. It's enough.
Yes, if you want to show us something, we are very curious.
Okay, sure. 2 seconds, because I have a very big monitor, and if I share that monitor, nobody can see, to be honest. But I have a little monitor here. Okay, guys, can you see my screen?
It should. Wait a second.
Maybe I need to close my webcam.
No, I think that's okay. Now we
Okay, yeah, okay, perfect. Yeah, so what I use, for example, for my pre-market prep, I use 2 seconds, because I have this little monitor, so I need to drag and drop from my other monitor. For my pre-market prep, I use market profile. I love also to watch sometimes volume profile, but I also use higher time frame DVA, like the VWAP and higher time frame DVA. So I use a weekly DVA, a monthly DVA, a quarterly DVA, and a yearly DVA. Of course, I can trade scalping based only of these levels, but I like to see the bigger picture. So what I do, I create in Sierra a chart with all the higher time frame from the view of DVA, and here I have the study overlay, everything I need to see. And what I do, for example, let's say, of course, right now the market is closed, but let's say the market it's open. So what I do, all the important levels from my higher time frame DVA and VWAP, I can see here. And what I do, I create like zones, because, for example, here I have monthly DVA low, monthly value area low, previous DVA low. So where I have confluence with more levels from my higher time frame DVA and previous DVA, I like to mark these levels. Of course I don't go like a full prep right now, but just for example, only few zones. So after I mark these levels, let's say the market is here right now and we have the open. What I will do my hypos. I don't want to predict the market. I like to react to the market. So what I will do, for example, let's say first as long as the price sits above my key zone, I will watch for a pullback and maybe a continuation. So a breakout pullback trade. Let's say this is the first hypo, but if the market break and hold below my key zone, then I will adapt to the current market condition, and then I want to go short. A simple example, but the bread and butter of what I do, of course, all of these zones I draw here, they go, 2 seconds, I will show. They go directly here because I use chart drawing. 2 seconds, guys, because I use chart drawing. So everything I copy on my main prep chart automatically will appear here. It's much easier for me to do prep like this because otherwise I need to draw a lot of stuff. So
Nice.
yeah, simple example from today actually. As you can see, I have a lot of stuff in my chart. So what I have here, I use RTH VWAP, I use also RTH VWAP, but also, to be honest, I think a lot of traders, a lot of order flow traders, they use the VWAP, but not a lot of them, they use standard deviation like DVA high, DVA low. And here we have -1, -1.5, -2 standard deviation. Why I like to use this is because, for example, for me, let's say, example from today. In the last night, we opened with a gap down. We opened with a gap down, but after that, the market is imbalanced down. So the market, as long as the market is below the DVA low, the market is imbalanced down. So I have like a bearish bias. But if the market failed this imbalance down move and then become rotational, so when I say when become rotational, the market will be above the DVA low. My expectation is the market first will go to test the VWAP and then the DVA high. So for example, today at the market open, again, the market is imbalanced out, but right here, exactly at the ETH open, the market open here. To be honest, I don't like to trade the first minutes of the market. I know some traders, they use opening range breakout strategy like 30 seconds or something like that. Nothing wrong with that. Sometimes I use that also myself, but overall, I don't like to trade in the first minute. So what I love to see, I like to wait a few minutes. And for example, yeah, here I have an order flow trigger for going short. But of course, I don't go short only if I have an order flow triggers, because it doesn't make any sense to execute in the middle of the structure for me. So what I would love to see, I wait for the market to see if I have like a breakout pullback and watch for a potential long, if only I have a long signals from here, but that doesn't be the case for today open. And after the market became rotational here, as long as the price is below the DVA low, I can watch for a pullback to the DVA and going short from here. Of course, maybe first target at HVWAP, then in extension at HVWAP. And I want to show you something, guys. Here I have these triggers here. These triggers is from a custom study of mine. It's absorption detector. It's based on a lot of criteria I like to see in that zone, but also what I like to see. 2 seconds, because I need to search on my other charts. 2 seconds. Okay. I have a lot of order flow triggers directly on my footprint chart. In the past, long time ago, I was only watching my main chart, cumulative delta, for potential divergence between the price and cumulative delta, because I want to see the lack of participation and absorption. And I also watch the price ladder, and I also watch the footprints, but I do that like, with naked eye. But in the last years, as you, David, you already told us, you use also AI in your own trading. And what I do in the last years also, I learned a lot about C++ and also a lot about Sierra, because I create my own studies also with C++ directly in Axil, but also with color bar based on that condition. And what I build here, because I don't want to watch all the numbers in real time, and it's much easier for me, I build a lot of triggers. I have more than 10 order flow triggers on my footprints. So for example, when the price is near a key zone for me, and I say, okay, you know what? This is a key zone for me. I want to go short from that zone. What I will do, I will watch my triggers on the main chart. I will watch cumulative delta, but also I will watch my triggers. And if I have short, for example, exactly in that area, as you can see, I have a lot of triggers. So when I have this kind of stuff, for me, this is a very good setup. I will enter after the candle close. I will put my stuff above the candles. I usually I have like a tight stop. I have around 2 or 3 points stop loss in SP 500. So I am like a scalper. And then after that, I will seconds to clean this. After I enter in the market, then I trade and I manage my position. To be honest, after I have around 2R, I like to scale out something. Then I put my stop loss to break even or trailing stop, and then I try for 3R, 4R, something like this. So very simple. This is what I do. And for example, after this trade, you see only very short order flow signals. And after, when I have some potential delta rise or feeding momentum, this is for me maybe a key area to take some profits or to trail my stop, because this is the first signals the market can go long. Not go long. The market can pull back from that area, and then we have this little pullback for a few points. So this is what I do in short. Of course, in the at the guest lesson, I think we have 2 or 3 hours. I will go more in the details, but long story short, this is what I do every day for over a decade.
You gave us a course already.
No, I need a lot of hours. But this is long story short.
No, thank you for sharing a lot. It's a lot of information. Very nice.
Thank you.
So as I said, I wanted to have the reason why I didn't have there is only one guest for treasuries is first because there's not many of us trading them, and not many of us willing to share as well. But I wanted from the very beginning to invite experts in their domain, in equities, different approaches, to at the right moment in our program, to like I said, it could help you if you are an equities trader, an ES trader, for example, and you've only ever traded ES. All the knowledge that you have on the equities on ES isn't going to thrown away into the bin. It's going to be enhanced by understanding the relation of the treasury market with the equities market. For the Forex as well, if you've ever only traded Forex, you are missing something. If you traded another market, then if you aren't relating them to something else, you are missing something else as well. So that's why I wanted to have multiple perspectives from this in this sense, I would say. And now we have Serge. Do you want to share something with us? Your microphone is off. You disabled your microphone, I think. No, I think that you have switched off the microphone in. Okay.
Can you guys hear me now?
Yes.
Yes, we can hear you.
Perfect. So apparently my other microphone isn't connected. I don't have anything special to share, other than mostly I've been trading for a few years. Been trading Orderflow since 2009. Before 2019, I got into it. 2017, more like it. Got the whole COVID thing. I'm still working on developing some stuff. I'm trading multiple assets with a focus on equity indexes. And I can describe my style of trading as being all over the place, basically. I'm on to whatever's moving. But that has a limit as well. I'm not I'm not trading crude oil, for example, right now. I'm not touching it. I'm just using it to see if the flows in crude oil drive moves on other markets. And that's about it. I have 10 ladders up. I use an auction market framework as the bread and butter framework that I use. And basically, I use footprints to access my trades, and I use volume charts to gauge rhythm of the market and flow, basically. And then I just use the ladders to get on positions and keep me in them. And I use correlations between different assets to size up into my trades. I have a very particular way of trading. I have around a 30% win rate. Whoever tells you that it's not possible to make it in this business with a 30% win rate doesn't know what they're talking about, basically. I just get into trades with small sizes, very extremely tight stops, based on different order flow cues and correlations between assets. And then as my thesis proves right, I just pile into positions like relentlessly. Yeah, this is why I have a low win rate, because I always add in and trail, add in and trail, add in and trail. You always have to be careful to not over leverage yourself. And I'm still working on some stuff. It's a more dynamic way of trading, but it's pretty good. The results are showing trading like this. And looking at multiple markets always will help you more rather than being focused on a single market. Being a technical trader, like if you're focusing on just a single market, you're kind of limited to being only a technical trader, meaning that you have to have more technical setups, much more defined, and you won't really be able to take advantage of stuff and opportunities when they show. And that's about it. Like, I just trade what's moving. I have a plan. I'm a big believer in prepping in the feedback loop, creating your own feedback loop as a trader. I find that thing very extremely important, more important than the technique you're using. Having the prepping, journaling, and debriefing feedback loop, which feeds into the next day, and then just continue like this. This is what will reinforce you and make you a better trader, because at one point, if you do it daily, like if you do it today, you start today to doing it, you do it tomorrow, you do it after tomorrow, you won't notice a thing. But after 1 year, I guarantee that you will notice some stuff that you didn't know 1 year ago, and it will make you a better trader. I don't trade a lot of treasuries, but I look at the treasuries markets all the time, because that's the engine of the financial markets. You can find everything you're looking for in the treasuries, whether it's being inflation expectations, central banks, monetary policy, how markets are pricing in different risks, and what's happening. For example, today I've stepped away from my desk for a few hours. I've been out to dinner with some friends, and I just came back before this event. I arrived back, and I was just looking at the ladders, and I was like, okay, was there a de-escalation announcement, or what has happened? I saw that directly by looking at the ladders. I saw crude oil was down, treasury futures were up, equities were up, so that must have happened. So I didn't even read the headlines on my Zenith. So yeah, that's about it.
Thank you. That's pretty much aligned, as I said, with like I said previously, with what I do. And yeah, Serge said it correctly. The treasury market is the engine. It is the single source of truth. If you want to have all of the market expectation and everything that is happening in the world, it will immediately translate in treasury market movement. While other assets might be erratic at times, just because of their volatility, they might be a bit dishonest, I would say. there are various kinds of correlations depending on what is going on. Stagflationary fear, inflationary fear, monetary policy announcements, all that kind of geopolitical risk. All of them doesn't play out perfectly all of the time, but when they do, they give you the best setups. Also, as we've noticed with this geopolitical escalation in Iran, is that due to how much oil jumped, the normal risk of safe haven place didn't work, because it was just everything was pricing that badly because of the inflation expectations, and the fact that another 20 days of Hormuz closed and we will have a great recession again. So that is the fear. But yeah, today, oil had its biggest jump in recent history, and it gave back much more than what it gained, basically. I'm going to see that there is some de-escalation. I saw that there is some de-escalation things going, and this is basically my main screen here. I don't have, somebody suggested me to install something to zoom my mouse where I'm looking at, but that's not, I didn't find it. I didn't look for it, so sorry. But yeah, in the top left here, you've got the equity section along with the short-term interest rates and the European bond. Then we have the Eurostoxx 50 for the European equities, apart from for the FX market with the yen and the euro, and then we go into ES, then oil, then gold, and now silver. It can change depending on what kind of style and what kind of narrative I am currently driving. You can see that the ladders on the right are much bigger now compared to the others, and they are also thinner. Of course, because of the volatility, I need to see the acceleration, the slowdowns. I want to see how the market is moving. For instance, how ES is doing, because I've been an ES trader for a long time, so I can see on the ladders when some specific. Because when I traded only ES, well, of course you see a lot of stuff on going, because you want the next setup. Like Serge said, if you trade one asset, you're going to have a lot of setups. So Chris wonderfully uses custom studies, colored bars, visual impact to see a lot of kinds of inputs and translate that into a trade. No, so that is the thing with having a multi-layered strategy, and you have to exactly know when to kick in with one against the other. But if you have, of course, if I have my treasuries market, they are slow, they are big. I still have my one or two charts that I use for treasuries, and when I see that great setups that I have on my charts, I play treasuries, of course. But with my eyesight, I always keep an eye over here when I see certain patterns, certain things going on ES, because I have some kind of muscle memory on the setups that I traded for a long time. And of course, when there is volatility, like since early in the year, I traded gold a lot, and I traded oil in the past week a lot as well. Like for instance, today the only trade that I had on crude was this one. You can see that we gapped up badly on. Let me open CR because. Oh, come on. Yeah, like I said previously to the guys, I have internet problems today. Like the worst day to have internet problems. But anyways, we can see. I got a short one this breakout because for the whole week we had oil pumping while of course equities and treasuries were suffering. While at a certain moment, let me reload this. Okay. Alrighty. Yes, just a matter of reloading. But it was stalling over here, which is about the opening price from Sunday with this huge gap up. We got it stalling and reversing twice. Then I saw this acceleration to the downside again, while Zien was taking an ease on the tops. Plus, at that exact time, somebody in the USA said from the officials say in Europe that they're going to use the reserves, the oil reserves. So that was kind of a relief. And then it accelerated to the downside, and I added up to 6 micro lots on CL, and I kept it more or less until the opening gap at 91, because I didn't want to, to give up on the opportunity. Or at the beginning of the year, while we had all the gold and silver drama, it was really, for me, it was very easy to trade the gold and get up. Of course, you have to pay attention and use micros, because I wouldn't ever trade a full outright contract on neither one of those. But with micros, it's very manageable, especially if you pair it with something else. And the classic stuff: acceleration, slowdown, reversals, feeling the pace, taking a look at what its related market is doing, what the market overall, what the traders are doing with their money. So if they if they're pouring money in some parts of the economy, it's going to mean one thing. If if the money is moving elsewhere, it is another kind of regime. That's the idea. You build this kind of narratives. I don't have my charting. I use ITAS, but I don't have it open because I have already a lot of stuff open for this live. But I will do. You might remember from more than a year ago, we were doing in 2024. We were doing basically almost daily lives on the Mr. Orderflow server, and for the next 2 weeks or so, I will probably do one almost every day. So it's not going to be like streams when you watch like we are doing right now, right? It's not going to look like more collaborative, like we do a part of the session all together, no? Like we were doing previously. And so yeah, you're very welcome to come, and you might get impressed by the amount of ladders over here, but it's the best way for me to have an eye out onto multiple markets of what is going on everywhere, literally almost everywhere, apart of agricultural markets, I would say, which are wonderful markets indeed to trade, and see how they are moving, where they are moving, and all that kind of stuff. For me, it is much more effective to see them onto doing what they're doing relative to each other and how they're moving onto a chart. For somebody else, of course, you might find it impractical to have just small charts for each of the markets and trade from charts, right? So that is mostly something for somebody that trades a less markets, no? And it doesn't mean that during the program we will start from scratch using such a layout not even in the end. We will build up the grounding foundation from over here, and we even will start slowly. We will focus on the ZN first. I don't know if you see my mouse. We will start from the ZN and the ZN alone, pairing it with two kinds of charts that I daily use, and they work beautifully. Just after, we will add the ZB. ZN has a $15 stick, $31 stick. Then we will add the ZF and the ZT slowly, very slowly. Only after we will add ES, and probably the first lessons of trading them together will be just the ZN and the ES. It is because it's going to be hard initially for somebody to understand and look at 4 plus already 1. So it will shift your focus too much on the 4. So we will just use the belly. After that, we will add the yen. And why the yen and on the euro and on the Swiss franc? Because the yen is the most directly correlated FX pair. I mean, not the yen, but the US dollar, USD, JPY. Of course, here you have directly the yen. No, you see the numbers, the decimals. There are a lot of decimals, but it is directly extremely correlated. You can see even now we've closed at the top, while the ZN was at the top on such days where you have such a great positive correlation, and you might miss that exact tick to get into the position and already be in profit, or maybe the ZN started moving. You have plenty of space to move on the yen, for example, which is yen is a wonderful market. You've got more than 100 lots per price, even more than that. And also, and only after, we will add the oil and gold mainly, because of gold has been weird in the past year or so. It didn't respect exactly what it should be doing, but that's because countries and central banks were accumulating thousands of tons of gold since 2022 as a store of value and to avoid sanctions. So it behaved a little bit differently than it should have, and even now it is more directly relating to a risk of environment. I would say it is volatile in the same way as ES, and they often correlate, so that is a bit weird. But oil and gold will be only toward the end. The most important correlations are between the equities, which will be very familiar to most of us, so it will be easy to integrate, and the yen just after. And then from there, slowly you will build up your own understanding, your own setups, and in terms of how you lay out everything. And if you want to join us, mercuryintelligence.net, education/education. You have all the program over here, week by week details. And at the end, there isn't a direct payment link because I removed it because of a number of reasons. You will receive, after filling the form, the enrollment application, within 48 hours. We will let you know if the application is accepted, and just after that you will get back a payment link with an invoice. And so of course, for whoever is still watching, being part of the program is one of the only ways right now to get the closed beta for the Mercury Terminal as well. Mercury Terminal and all the infrastructure that comes with it, behind it, is not going to be released to the public for a long time, probably, because of the way that we are, because of our business model. It's not a retail, not mainly oriented toward a retail public. So as part of our strategy, it is going to be directed for another kind of audience first, but this is a way for you to get into the glottal beta, which will be likely quite long, and then we will see how we will get going from there. I will do more videos. We will do more videos about what the terminal does and how it works and everything. But we've put a lot of effort into it, almost a year now of day-to-day work. So, Christian, Serge, do you want to add something? We might talk. Do you want to talk maybe about the markets, the current markets? How did you trade these days? How did you trade the geopolitical escalation? And yeah,
For me,
please.
yeah, I can go, or you?
Yes.
Yeah, for me these days I don't trade too much. I mainly trade 2-3 trades per day maximum. Guys, you already speak about the crude oil, and when I see the crude oil chart, I remember a long time ago. To be honest, I think for 3 or 5 years, something like that, 3 or 4 years, sorry, I was trade only crude oil market, and that was not a good idea because when the war with the Ukraine and Russia starts, the market, crazy volatility with thin liquidity, not a great combo for my style. And then I moved to SP 500. Yeah, of course, I watch also Nasdaq, gold, crude oil, and so on because I like to correlate the markets. But my main markets I execute on SP 500. And these days I don't overtrade. I don't try to risk too much. I like to keep my risk small. I risk maximum 1% per trade on my personal accounts. And yeah, I don't have like 100% win or something like that because, to be honest, if somebody tell you that, I think he's not a trader. Maybe he only want you to sell something, or he's only a guru from the Instagram or something like that. But I like to trade 2 or 3 trades per day. If my first trade, it's a big win for me is like 3 or 4 R. When I say 3 or 4 R, for example, if I risk 1% and I make 4%, for me, after that, I will finish my day. Yeah, maybe I stay and watch how the markets react and so on, but I finish my day. And I like to have strict rules. For example, if I have a day with 3 losses, I will finish my day. And if I have back-to-back days with 3 losses today and 3 losses tomorrow, I will finish my week. Of course, this happened very, 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 very rare, but I like to have rules in place because I think we are traders and we need to protect from ourselves because, a lot of traders have problem with FOMO, revenge trading, over trading, over leverage, and so on. So for me, I like to keep it simple. I have my charts, I have my prep, I have my triggers, and then I have my rules. I trade mainly SP, but also told you guys I look at other markets. And yeah, but what it's I like to finish this live streaming with something. I saw, guys, you watch a lot of DOM or a lot of price ladder, and it's quite interesting because I have also a lot of full-time traders, a lot of friends. They trade with price ladder. For me personally, I only execute on the price ladder, but I don't have strategy based on the price ladder. So it's very interesting how we are traders and we can make money in the markets in millions way, different approaches. But in the end, I think depends on what you want and what is the best fit for you, And in the end, thank you for the invitation, guys. I really appreciate it. And also sorry because I speak in English very rare, so I'm not an expert, but I hope everyone understand me, and I appreciate the invite. It was a pleasure to be with you today.
It's a pleasure to have you as well today. Yes, as you said, it's very interesting that there is a million ways to make money. Just that,
but also more ways to lose money.
Exactly, a million ways to lose. Probably 1,000,001 ways to lose. Yes, true. But yeah, everybody has their own different approaches, and that's why I really wanted to have you in the program, which is wonderful that you accepted. So yeah, Serge, are you enthusiastic?
Yeah. I'm like, truth be told, today when I was in some meetings before the market opened, I was in the prepping everything, and I completely forgot about the hour change. That the market for a period of time will open 1 hour earlier than it usually does in my local time. I completely forgot about that. I had CR chart open. I didn't even have my ladders up. I was doing my prep, and all of a sudden I see stuff moving, and I'm like, "Holy shit! No way, this is not happening." So of course I fired up my jigsaw instantly, and I tried to hop on a trade. By the time I hopped on the trade, it was kind of over. I kept shorting at the lows. It seemed like it was going down. Like on the price ladder, you had this movement where the pressure was still to the downside. You kept seeing the pressure, but it was kind of stuck on the S&P, and then you would have that each break lower was getting pushed back violently, but not a lot. But you could see the ladders keeping a few prices each time we would try pushing lower. You could see skipping it. So that's kind of a change in the sequence of how it has been trading. So I got my ass handed to me on that. Honestly, it just kind of blew up at some point, and I said, "Okay, I'm done for the day. I'm not touching this again." I shouldn't have even touched it when I saw the market opening and my prep not being done. But it was this was on me. So mistakes like this happen. But
Thank you for being honest.
this is in all honesty, yeah. And I found the markets pretty difficult to trade during these times, especially with the big volatility. It takes some time getting adjusted to them. I just have to I just have to downsize a bit and give it more leeway for a trade. And it's been hard from an order flow perspective because the behavior changed into such a way that continuations and expansions aren't that clean anymore. And you kept having that behavior when the price would just push up, especially at the open when you would get nice opening drives. When you would get them, price would just push up and it would snap back violently, then keep pushing up, snap back violently. That was pretty hard to trade and add on to those trades, but overall it's been okay. I've had more success trading when volatility started to fade in the second part of the day during the recent period of geopolitical situation, rather than usually when I'd have my trade at the open, I would bet straight from the get-go, and I would just have my trade and then close everything, and that was it. Once the sequence changes, and I'm out of the trade, I don't care anymore what the market does for the rest of the day. The past week has been different in this sense because trade opportunities appeared a bit later when volatility kind of calmed down a bit. Moves were a bit cleaner, not so erratic. But yeah, this was my experience in the past.
Okay, nice. I wonder how long we will. I think it's not good. It's far from being resolved, and yeah, it's going to be tough probably in the coming months. I just well, for a trader to be in these times, it can be very profitable for a trader to be a trader in these times and understand what's going on. But at the same time, it's extremely difficult. So maybe sometimes somebody might prefer to stay out and stay in their own comfort zones, which is perfectly understandable. And because you might get into the hype, or maybe you have a wonderful day because you catch a wonderful move because of the volatility, and then the next day you want more, and then the day you want more, and that's where you have to have rules like you, Chris, where you just
Yeah.
keep
And
in
also, for
control.
example, what I like to use also in these times, for example, usually maybe I use a 10 range chart, when the market is very volatile, I like to increase my range chart maybe from 10 to 14 or something like that, because it's very hard to trade. For me, for day trading, I don't use time-based candlestick. Yeah, I use that for my long-term portfolio and that, but for scalping, I like to use Renko chart, range chart, volume chart. I like to focus on this, but I am like a scalper day trader. But when we have this crazy volatility, I like to increase my charts because this is worse for me. I don't know for of course every trader is built different and so on, but for me this makes sense when we have crazy volatility.
Absolutely. Yes, you have to adapt those. Yeah, me too. I use a kind of similar the range US charts on Atlas, which are kind of similar to the Flex Renko charts on Sierra charts. That's the main chart that I use for the ZN, because it's wonderful how clean the reversals are on there, and that's for the reversals. And when it comes to driving the move, I mostly use either just pure simple reading the ladders and heat maps, following liquidity as it grows and goes further with price, and until it supports the movement. And for example, a bid, you have a bid, you will have literally no offers above, so the price is kind of free to move to the upside without any friction, while you have those steps of liquidity on the bid. As much as the market goes, the liquidity moves up toward the upside, but that's a feature of the treasury markets specifically. For others, it depends. Mostly range based, because they work the best, like you, Chris. I use mostly range derivation charts for anything else. But for example, for the ES, I use a kind of it seems like a point and figure chart, but it's named differently in Atlas. I don't remember now. It's like the range X, I think, on Atlas. It is similar to a point and figure one. Yeah, that's it. But for most of them, I just use a volume profile, daily volume profile with candles, normal candles, like 1 minute, 5 minute candles, because of I just want to see maybe where they are, how they get there, and then just finish off my execution and read it on the ladders. Yes. Alrighty, guys. I think that we can wind it up. So yeah, thank you everyone for watching, and see you next time. As I said, come on to the Mr. Orderflow server, and if you're not already there, I might hop into the monkey cage more often during the next couple of weeks until the program starts, and hope to see you there. Thanks for coming, my guests, Chris and Serge.
Thank you.
Thank you all. Thank you also for the invitation.
Thank you very much. And have a nice evening, everybody. Bye-bye.
Goodbye, guys.
Bye-bye, guys. Take care.